Hello, how to depreciate a business asset. I'm going to use maybe 5 assets you can depreciate within between 5 and 10 years to explain how you can depreciate your business assets. If you do not have an accounting software to track your depreciable assets, you could use a spreadsheet to do that. You can design it yourself, and I believe IRS publication 946 will have a template you could use as well, or a template you could use to design your spreadsheet. And we have a template, depreciation summary template at liberdownload.com you could purchase to depreciate your assets as well. But let's go through the spreadsheet to see how you depreciate your assets. So when you purchase assets throughout the year, it is a good idea you record those purchases. So what you could do during the year would be to record the assets, the name, the date you purchased the item, the cost, and the date it was ready to be used in the business. So that's the date you place it in service. You don't have to start using it that date, but it is the date you set it up. It is ready to be used. And if you are going to use 100%, it'll be good to know that as well. And one thing it will be a good idea to notate will be to take a note of will be the quarter you place it in service. And you can just record those few, you can just make those few entries to your depreciation spreadsheet throughout the year. And one thing I will point out is it might be a good idea to avoid purchasing and placing the bulk of your depreciable assets in the last quarter. If you place most of your assets, you place in service most of your assets during the last quarter, and I believe the ratio is 50% or more of your, no, I think it's 40% or more of your depreciable asset. If they are placed in service during a quarter 4, you will use mid-quarter convention in your depreciation calculation. So yeah, so that's 40% or more. So I try to avoid that. So now that we record, you record all your purchases during the year, toward the end of the year, you can start adding more data to your spreadsheet. So one thing you will do at that point is the depreciation. So pretty much toward the end, you can note if you use the assets 100% in your business. So therefore the basis the business use 100%, that means the percentage you use it for investment will be 0. Therefore the business cost will be equal to the cost of the item. So the percentage of business and investment use will be 100%, which is just be the total of business use and investment use percentage. So the cost of business and investment use is going to be pretty much the percentage of business and investment use times the cost of the item. And I do not claim section 179. So if you will claim section 179, then you will take that into consideration and you will read the publication to learn the instructions to Form 4562 Depreciation and Amortization to understand more about section 179 and special depreciation. I do not take those depreciation. At the beginning of your business, it may not make sense to take them if your profit is low. But if you have a high profit, it might be a good idea to look into those type of extra section 179 deduction and special depreciation. So pretty much section 179 allows you to deduct the full cost of your depreciable asset in the year you place it in service. And you can only take it that first year, and you have the option to take an additional special depreciation as well. So you pretty much, if you are going to take those depreciation, you will do subtractions to see how much you have left after you take, section 179. And if you take special depreciation, you will pretty much see how much is left to depreciate at the end. So the basis for depreciation will be the pretty much business cost minus the section 179 minus special depreciation that you took. And in my model, in this example, we are not taking section 179, we are not taking any special depreciation. Therefore, the basis for our depreciation is going to be the cost of the item, as we use the item 100% of the time. So if the item is the asset is an asset you use partially for personal use or for investment, there is a rule around that if you want to take section 179. I'm not going to get into that in this session. So we are just going to depreciate the asset. So at this point, you could decide, and we decided that we are going to depreciate the asset. So we could easily complete the form up to basis for depreciation. Another thing to point out is most of the business assets will use depreciation system name GDS, General Depreciation System. So there is few instances that you will use Alternative Depreciation System, ADS, and it is in the description as well, but most of the assets will fall under GDS. So you could easily put GDS if you are going to use GDS in your spreadsheet. So those could easily be added to your spreadsheet or when you are getting ready to calculate your depreciation deduction. Now that we have those things set up, there is few things we need to know to be able to depreciate our assets. So I think I have my notes here. Let's see. So you need to know the date you place your asset in service, the basis amount, so the basis for depreciation, the depreciation system you are going to use, in our case is GDS, the property class, the recovery period, the conversion method, whether it's mid-month, mid-quarter, or half year. You use mid-month for residential properties and non-residential properties. And you use mid-quarter and half year for regular business assets. So mid-quarter, you'll use it if 40% or more of your assets are placed in service, like the cost for depreciation is 40% of that is 40% or more than the total asset you place in service during that year. In that case, you'll assume you have to know the quarter you place each asset in service during the year, and your calculation will take into consideration that you place each one of those assets midpoint through that quarter. So half year is assuming you place your assets in service during the year halfway through the year, and that's what I'm aiming for. Therefore, I avoid purchasing most of my assets in quarter 4 so that I don't have to deal with mid-quarter conversion method. So depreciation method, once you figure out the conversion method, you will choose the depreciation method. You have the option between 200 GDS, 200% GDS, 150% GDS, straight line SL GDS, and then straight line ADS. If you choose not to use 200% GDS or 150% GDS and you are using straight line because it's giving you a higher deduction for an asset class, for a particular asset, you'll need to use it for all the assets in that class. So 200% will give you a higher deduction at the beginning of the depreciation year, and then it will slow down toward the end. Same thing is for 150%. It's just going to be a little bit lower than 200%. So, but you are going to have higher deduction for the first few years, and then that will slow down. Straight line is going to be pretty much like if you are taking the cost of the item and divided by the number of years that is going to be depreciated by, to take equal amount of depreciation deduction a year. But the first year and the last year are going to be different because of the conversion method you take. So if half year, that means the first year and the last year you'll take a half deduction. So if the asset will be deducted in 5 years, chances are it's going to be deducted in 6 years. And the first year 1 and year 6 will be half the amount, pretty much. So I'm not going to talk about ADS, we are going to talk about GDS, and I just like to go with straight line. So, and then you will locate IRS depreciation rate table. And I'll point out that there is another appendix in IRS publication 946, how to depreciate a property, that we will use. So those are the few things you will need to figure out to depreciate an asset. So now let's go back to the depreciation spreadsheet. So we know we are going to use GDS. So how do we figure out the rest? Depending on the asset you have, it is good when you are depreciating an asset to have publication 946 and instructions to Form 4562 available. You can find them at irs.gov, and we do put links to IRS publications and form on our blog ninasoup.com under free download as well. You don't need to enter email to access those free downloads we have on our blog. So what you will do is, if the assets, some assets are easy to to find in the publication. So we are going to go a little bit up to read about the asset property. So they have the list of asset property under GDS. They have 3-year property, 5-year and 7 years. So you will look under the 3 years is the list is short, but you can go through them to see if you can find your assets. If your asset is listed, and they have, it is a long list up to residentials as well, but we are just going to focus on 7-year and 5-year property. So if you find your property listed in the general list, you could go with it. Another options that I like to take is you read the name of your product, and in this instance, for example, it is a printer, and that printer, we could say it is a 5-year property, but it is not specifically listed here. So what we will do next, when you do not find your property, will be to go to Appendix Table B. So let's go a little bit to the end of the publication 946. So that will be C89. Okay, so they have Appendix B. It has table, I don't know if they call it Appendix B. Let me see. Appendix B, table of class lives and recovery period. So you can read the instructions under Appendix B. They have few examples to help understanding it. And yeah, the explanation a little bit above help understand the table B1 and 2. So you will first look at table B1 to see if you will see your printer. And if we read the description of the assets, they have printer located in table B1. The way this Appendix B works is you will first look for your asset in table B1. In the printer example, we find printer under asset class 0012. So now we'll go to table B2 to look for the business that is using the printer. Table B2 have businesses listed. So we'll read through it Under description of assets included, depreciable asset used in the following activities. So we'll read through it to find our business. And our business is asset class 57.0, and the activity described is distributive trade and services. So you will read the activity that is using the asset. So if that's the activity, that the business activity that is using the assets, then you will read the description of the asset listed under that business activity. So here they say includes asset used in wholesale and retail trade and personal and professional services. So those type of activities are under asset class 57.0. So that includes section 1245 asset used in marketing petroleum and petroleum products. So they didn't really list different type of assets you can use in wholesale and retail trade, personal or professional services. They describe it, but they didn't list the assets. So when you do not find your asset specifically listed under the business activity, then you go back to table B1. And table B1 asset class 0012 has printer. Therefore, we are going to use the class life of table B1 where the asset is listed, and the class life is 6 years. They have GDS recovery period 5. So since we are going to use GDS system, depreciation system, then our recovery period is 5 years. So now when we go back to our spreadsheet, we have class life, we have the asset class where we found the assets. We took note of that, and that's 012. And asset class C's. And when we go all the way to the right, we have recovery period 5. So let's go back to when you find the asset class, you didn't really find the property class. They did have the recovery period, but it does not have the property class. The recovery period and the property class, usually they are kind of related. So having 5 years for recovery period, the property class is 5 years as well. Another way you will find it out is to go to instructions for Form 4562 Depreciation and Amortization. So you locate the class life, which we found was 6 years. So more than 4 but less than 10, the classification is 5-year property. So you want the property class, so that's 5-year. Now that you know the property class, when you scroll down, you correspond that property class to the recovery period. So 5-year property class corresponds to 5-year recovery period. The table B2 does not have property class but have recovery period, and you can link both. You can figure out the property class by looking at the recovery period, because they are pretty much same year type. 3, 3, 5, 5, 7-year property is depreciated within 7 years. That's just the meaning of a recovery period, the number of years you are going to recover the full cost of your item, pretty much. So now that we know those information, we will come back to our spreadsheet. We will put the classification of property. So 5, the recovery period is, we are going to use GDS, and the recovery period is 5. We find that out on table B2. So now that we know that, we will now go to IRS depreciation table, and that is found in Appendix A. And for the publication 2021, it is on page probably 59. No, is on page 70. So Appendix A, and they have a little description on top. So we have some information for our assets. We know we are going to use GDS. We know the recovery period is 5, and we know when the quarter we place it in service as well. So, and we know the class. So the class here is pretty much the property class is 5 as well. And we can look for the quarter we place it in service. It was quarter 2. So now you have options. Knowing those facts, you have options. Are you going to use depreciation method 200%? So under that, you have all those type of recovery period type assets you can depreciate using 200 depreciation method. And we know that most of our assets were placed in service before last quarter. Therefore, we are now going to use mid-quarter. We are going to use half year. So after, we know we have few things in quarter 4. So one thing we will look at is the amount of assets placed in service in quarter 4, which is one item, and compared to everything else we have, and we know it is nowhere near close to 40%. Therefore, we are going to use half year, and that's why we have half year in our spreadsheet. So going back to the Appendix A, we know we are going to use half year, so we can ignore mid-quarter rows. So we have half year, the top one, doesn't matter what quarter you put in service, and pretty much half years will ignore the quarter. If you are going to use mid-quarter method or convention method, then the quarters will come into play. It will dictate what table you will use for each one of the assets. You place an asset in quarter 2 and you are going to use mid-quarter for all your depreciation for that year, you know, and asset you place in quarter 2 will use table A, for instance, and another asset that was in quarter 3 will use table A4, for instance. So we are going to use a half year, so the quarter will not matter. But are we going to use 200%, 150, or straight line? So in this example we use straight line. So GDS straight line, GDS for the, let me see what is that, recovery period, a half year, any recovery, any property class, and any quarter, you will use table A8. So now that we found table A8, we will scroll down to pretty much the table. You have table A1. We are looking for the 8th one. And that's table A8, straight line method, half year convention. And our asset has a 5-year recovery. Therefore, recovery period years, we will use the 5-year recovery period colon, and you'll notice that it will get fully depreciated in year 6. 1, 2, 3, 4, 5, 6. So what I like to do is I will copy those rates to the spreadsheet. So we will go back to the spreadsheet and we will complete it. So pretty much what we will do for that first asset, we are going to use straight line, so we'll add it is half year. So those two things, we will add them, and we'll go to the right and we have the recovery period. You know, the convention method is just going to be a duplicate from the left to the right, and the depreciation method, we chose straight line, and we have table A8. So I will put it down here, and then I will copy the rates from the rate table A8 to the spreadsheet. So you'll notice that it went all the way to year 6, and therefore the spreadsheet automatically will calculate the rates on the depreciation deduction using the rates. So the first year will take rates at year 1 times the basis for depreciation, and the year 2 will take rates for year 2 times the basis for depreciation, the same, the cost of the original cost of the item that is getting depreciated. And if you do it well, when you total all of them, it should equal the original cost that you start with to calculate the depreciation. If it does not, something is wrong somewhere. You need to verify the rates and the formula in the depreciation deduction. So that is the principle you will use to depreciate your assets. So now let's take another example. The second one is a cutting machine. So it was placed in service in quarter 2. We will go to our appendix B, table B1. And table B1 will not have that cutting machine in the list. Therefore, we'll go to table B2, and the table B1 is just one page. So you'll read through it to see if you'll find that asset. And since it's not in it, we'll go to table B2 to our business activity to see if the cutting machine is listed, and it is not listed. So one, the business asset is not in table B1. We go to table B2 to look for the business assets, the business activity. The business activity is listed. We look for the assets to see if the asset is specified under that business activity. Step 3, the business asset, the depreciable asset, it is not listed in the business activity. So we do not have it in table B1. Table B1 has list of assets. Table B2 has a list of business activities, and under each one of them describe assets used in that activity. So in this, with this cutting machine, it is not in the list of assets in table B1. We have the business that is using it. We have the business listed under table B2, but we do not have the cutting machine listed under that business activity. Therefore, we will use table B2 class life for that business activity to depreciate that asset. So that means 9 years is the class life for that asset, and the recovery period for GDS is 5. So that means the property class is 5 as well. But if you don't know, then you take this 9-year class life, you will report that on your spreadsheet, but then you go to instructions to form 4562 and you look at the interval classification. They have more than 5 but less than 10 is 5-year property. So that's 5-year property, and then you go down, and 5-year property has 5 years recovery period, and that's pretty much the same thing that is telling us here, that under GDS the recovery period is 5 years. So if you'll notice that if it was under ADS it will be 9 years, but since we are using GDS it's 5 years, so we'll depreciate that asset for 5 years. So we come back to our spreadsheet. So we have GDS, we have asset class. This one is going to be table B2 business activity asset class, so it's 570. The class life is 9 years, and then we can go to the right. We know that the classification of property is going to be 5, and the recovery period is 5, and we know we are going to use a half year because everything here is placed in service before the last quarter, so or most of them. So now we will go to publication 946 and we will go to page 80 70. So now that we know the property class, we know the recovery period, we'll come back to our appendix A, chart 1, and we will look for how we want to depreciate that asset. So we want to use the same thing we are using for the first one. So it's going to be GDS, straight line, GDS for recovery period, so GDS/5, because that's a recovery period. Convention is half year. It does not matter the class, the property class, and does not matter what quarter we put in service. Is going to use table A8 as well. Therefore, the rate is going to be the same as what we already put it on top. So we will put the same rate for the carrying machine as well. And when we put the same rate, so pretty much we complete the spreadsheet with those information that, you know, straight line, A8, and the rates, and the spreadsheet will calculate the depreciation for all the years we are going to depreciate it, and the total should match what we pay for it, or the depreciable, the basis for depreciation, pretty much $300. Let me see, $209.59. So I'm going to do one more, but that's pretty much the principle, the steps you use to depreciate your business assets. And I'm now going to talk about how you depreciate a car in this video. So it's just going to be, you know, assets you use in your business that does not involve car. So let's look at, so most of our assets will fall under 5 or 7 years, and we use one scenario where you found the assets in the list of assets in table 1 of appendix B. We use another example where you didn't find the asset in table B1, but you didn't find it either in table B2, but you found the business. Another option would be you didn't find the assets in table B1. You go to table B2, you found the business activity that is using the assets, and you found the depreciable assets that you are trying to depreciate. It is specifically listed under that business activity. Therefore, you use that business activity class life to depreciate the asset. So you are going to look at the class life and go look at the recovery period under GDS. Another scenario will be you found the assets, you didn't found the asset in table B1. You didn't find the asset in table B2. You didn't find the assets, you didn't find the business that is using the assets in table B2. Therefore, at the end of the table B2, there is some other options there that you can let's go back there. 108. So if the business activity is not listed and you didn't find your asset and you didn't find your business, then you can read through the bottom to see what you will use in that instance. But they have a lot of business activities listed that you will be able to find. You'll notice that even the assets class 570 has a lot. Personal, professional services, retail, trade, wholesale. All grouped in that asset class. So those are the the steps you will take to figure out the property class for your assets. So let's use another one that is not 5 years necessary. So let me see here. Okay. So there is a light that is being depreciated, and we place it in service in Q2. So we can complete, we have basic information we'll add to the spreadsheet. We know we'll use GDS, but then we don't know, the class life for the asset. So we'll go to our spreadsheet, we'll go to publication 946 and we'll go to appendix B, table B1. To see if you will find it. So since it's a light, it will be under fixture. I think it fall under the list of categories, the list of assets under asset class 0011. So when you read through it, they have live fixtures. So that's something to take note of. Now we'll go to table B2 to see if we'll find the business that is using that light. And we already know the business that is using those assets already. So, and it is assets class 57.0 retail business. So, but then we read underneath it, and they are not talking about live feature underneath it specifically. So we have the lights in the list of assets in table B1 of appendix B, but then we go look for the business activity that is using it. We found it in table B2, but then when we read the list of assets described under that business activity, we did not find that light. Therefore, we will go back to table B1 to read it again to make sure we have the lights in the list, and we do. Therefore, we'll use asset class 0011 and we'll use the class life 10 years. We'll use the information for the assets class where the assets is listed in table B1. So we'll go back to our spreadsheet and we will put GDS for the depreciation method. We will put 0.11 for assets class, and the class life is 10, I believe. Yes, 10. And with that information, we know that they have a recovery period there. That is 7. So the recovery period will tell us automatically that the classification for that property is 7 as well. But to be sure, we can go to instructions for depreciation, instruction for Form 4562 Depreciation and Amortization, and then underneath on page 8 they have 10 or more but less than 16 for class life. The classification is 7-year property. So we scroll down, and for 7-year property, we wanted to see the recovery period. And for 7-year property, the recovery period is 7 years. And that's pretty much the same thing under GDS they have in table B1 as well. So we will go to our spreadsheet, and that information will be added. So 7 years for property class and recovery period is GDS 7. So with that, we will go back to publication 946, appendix A, chart 1 on page 70. If we are talking about 2021 instruction, so we know we are going to use GDS. We are going to use straight line, and the recovery period is GDS/7. The convention is a half year, and property class is 7 years, so it doesn't matter any, and the quarter does not matter either. We'll use A8 as well. So we'll go back to A8 because we are going to depreciate for 7 years. So the recovery period pretty much is telling you how many years you are going to recover the full. It's going to take you to recover the full cost of the item you are depreciating. So the recovery period will come